Hey, listeners, welcome back to the ValueHunt podcast. And today I'm truly excited to be here with Sandeep Mendiratta. I hope I pronounced that correctly. If not, I'm really sorry. But Sandeep is the CEO of NOW.V Group. And full disclosure, I have a position in this company, so probably I'll be biased. But yeah, feel free to make your own research and all that. So, Sandeep, why don't you say a couple of words before we jump into the questions?
Thanks very much, David. Good to be here on this podcast with you. And I've watched some of your videos already. They sound great. And for what you're doing at your age, I must say it's phenomenal. So congratulations, first of all. I'm happy to be here.
Nice, perfect.
And you
So,
pronounced my name really correct.
oh, perfect, perfect. Actually, I should have asked before, but anyways, I guess it worked out. So, going right into the first question from the audience, we'll go through firstly the questions from the audience, and then I have a couple of questions from my side. So, what is the strategy for expanding in the US, particularly at the lowest cost provider, as the lowest cost provider?
So US is one of our key markets and growth markets as well. And David, our market share there is really low to almost non-existent for our size of the business. The opportunities are really massive. The US is going to be our key growth market, and we are definitely looking to expand in the US. What we have got is the team on the ground is really competent, and they have been operating the clients and working with the clients for many years now. We have also worked in specific industries in the US and some of the other solutions that we have delivered in particular industries outside of the US, for example, in the UK. Our plan is to bring those solutions and tech-enabled services to the US markets. We are looking to explore the technology industry, where we already have some phenomenal clients and great case studies, some very specific point solutions, which differentiates us from all the other competition. So we think we have got an edge over our competition there, and that positions us really, really well in that market. What we need to do is primarily build up or boost our commercial capabilities in the US. That would be one of the primary things that we would have to change or add as the capabilities in the business to enable that growth in the US. But absolutely, it's one of our target growth market, and you will be hearing more about the growth in the US market.
Perfect. Actually, I have a question coming from a friend, and he's really curious about the competitive dynamics between you guys and big four firms like KPMG and all those. So he's really curious to know, how is it possible that a small firm like Now Vertical, obviously you've done a great job so far, but it's still relatively small. How do you manage to really compete against these big giants?
So one of the points I also wanted to mention, David, before I talk about the big fours or these
Hmm.
large consulting companies, very well established consulting companies, we have no ambitions of becoming the lowest cost provider anywhere in the world. Our solutions and services are really high value. They are very niche solutions and services. They are enabled by some really modern technologies, and we work with many of the hyperscalers as well, likes of Google, Microsoft, AWS, Click, Snowflake. Um, uh, we are competing with some of these big fours in many of our clients because our target client base is enterprise grade, and that's where most of these large consulting companies operate to. We come across them all the time. And there are many situations where we win against the big fours. And it happens all the time. Very recently, even in the last 6 months, we have won three large projects against the big consulting businesses. And the clients, they don't buy our services just because of cost. They buy our services because our approach, our frameworks, our accelerators, and how we deliver that technology and the case studies that we bring to them, the proven track record we bring to them, and our ability to talk the language of that industry and help them solve those problems properly. That's why our clients buy. And when we are winning against these large consulting companies, we are winning on value and the capabilities we bring to the clients.
Mm.
So this happens quite often, actually, with us, and it's not that we win against these large consulting companies all the time, but we win a lot against these large consulting companies.
Okay, that's quite interesting. So going back to the questions, how do margins compare between strategic and non-strategic accounts?
Of course, our focus is on the strategic accounts. That's what that's what I said was one of our pillars when I took over as the chief exec of Now Vertical. And strategic accounts growth, we have got 100 plus strategic accounts across the business, which is really one big strength within Now Vertical. And it was one of the attraction for me as well when I was writing the one business, one brand strategy for Now Vertical. That was one of the key assets and attraction for me too. So this is the strategic accounts is where we are experiencing growth. We have been experiencing growth in those strategic accounts in the last year as well. We grew the strategic accounts revenue by more than 20%. Just the existing strategic accounts revenue more than 20% in 2024. So the margins for us are definitely higher from our strategic accounts than the non-strategic accounts, and our movement is also towards more and more onto the strategic accounts.
Got it. And is there more possibility of cross-selling within those strategic accounts, or is it like the same overall accounts?
100%. One of the key drivers of the integration is to be able to cross-sell and upsell our solutions and services from one part of the business to the other part of the business. And this is already happening. There are some examples. For example, one of our clients in the US was being served earlier just with the team and the capabilities in the US and the services that were just available in the US. Now, one of that client is being served from the US, of course, is still there. From Argentina, we are supporting with certain capabilities from Argentina. We have got the expansion of that client in the UK as well. So we are doing some work with them in the UK also now. It's a global client. And we are, there is a team from India that's working on that same account. So now we have already expanded the solutions and services we offer to that client, plus the capabilities are going across the business. So this type of work is already happening, and that's our key driver as well. The cross sell and upsell within these strategic accounts is going to be one of the key drivers for growth going forward as well.
Perfect. Okay, so going back to margins, how do margins compare between? Are there significant margin differences across geographies? So we talked about strategic accounts, and now it's more on the geography side of things.
We typically work with, and this is one of the standardization and consistency that we are bringing in the business anyways. We aim to have 50% gross margin across our accounts and across the geography, which is already happening in most parts of the business. Now you can imagine, if we are selling our own software, then of course the margin is higher, right? Where we are reselling the industry standard software like, say Click, then of course the margins over there are higher. When we are selling these solutions in a particular industry, which is a point solution and very niche solution, again, the margins are higher there. When it comes down to only say run-of-the-mill tech-enabled services, then that's where you see a bit lower margin. But in our case, because we are working on very modern technology and it's all cutting edge, driven by artificial intelligence, driven by a lot of automation that's happening there, data and analytics technologies, how they are evolving, we are able to manage, maintain really high margins across the business. So 50% gross margin is our objective to keep, and more or less we are there pretty much across the business.
Hmm. Are there any remaining low hanging fruits for revenue growth? How do you plan to address them?
Oh, so I won't even call their remaining low-hanging fruits, David. What I would say is there's so much of potential, and there is so many different avenues for us to deliver the growth in the revenue. You can pretty much have unlimited potential growth here in our vertical, and I really mean that you could have unlimited growth here. I'll just talk about certain drivers of growth, if you like. One is I talked about these strategic accounts, right? 100 plus strategic accounts. Our top 30 accounts give us 60% of our revenue, right?
Mhm.
There are many accounts where our revenue stream is more than $1 million. And our average revenue per client in the top 30 clients is about $700,000. That's what we grew it to in 2024.
Mhm.
Now, think about that $700,000 per year per client can be enhanced to 1 million per year per client, can go up to 1.5 million, can go up to 2 million, because they are not very ambitious targets for us. They are absolutely possible milestones because we have done it with many clients across the business.
Mhm.
So that's one of the growth drivers which you can keep. If you put the right frameworks, if you put the right methods, if you get the right teams thinking about the growth within these enterprise accounts, you can keep doing that in cycles and never-ending cycles here.
Mm,
The
okay.
second part is, we have the technology partnerships with the likes of, say, Google, Click, AWS, Microsoft. We are also fostering some more partnerships with some leading cutting edge technologies, and we will narrow it down to say no more than 5 technologies that we will really go to market with. Um, these technology partnerships, and we are premier partners with Google. You may have read that press release, recently, and there are more activities happening. We would like to, and we are one of the top three MSPs of Click in Brazil. There are certain assets we have, as I may call them. These are some of the drivers. We can change them into the drivers of revenue growth. So, for example, we can bring Google partnership and the credibility that we have gained by working so hard to achieve that level of trust with Google. Premier Partners is the highest level of partnership you could have with Google. We could bring that to the other parts of the business, right, and start delivering exactly that same secured, delivery model working alongside Google. And this could happen with Microsoft. This could happen with Snowflake. This could happen with Click. These are some of the revenue drivers we are looking to leverage, and we are already working towards that. For example, in the UK, we are already working with Google now, and we are working on a joint business plan so that we can explore more opportunities here. This will again give us more revenue, if you like. We are also looking at solutionizing our software. So the software that we have, for example, NOW.V, was being sold earlier as just a standalone license software. And typically what will happen is we will convince the client that this is a value add software for you, and then we train them and we leave that software with them. What we have now turned that into, and we have got a case study already working with one of the clients, where we have turned that into a proper solution where we not only just give the software, but we also then promise them the outcomes from our now privacy software, which then becomes a proper solution where we go in and look at the whole data estate of a client, identify the risk which could lead to data breach, the sensitive data like PII data or the financial information that may be lying on some of the SharePoint drives, for example, right? Which is not the right place for the sensitive information to have. And we can identify whether they are falling in the low category risk or the medium or high category risk to generate a breach for them. And that's direct value for them. Now, not only we can identify what is the risk, but we can also help them remediate those risks very quickly, right? So it now we are offering that as a nice end-to-end solution, which will again give us more revenue because now you are embedded in their business, and you could be delivering that value on an ongoing basis for many years to come, and keep evolving your solution as well with the client, which again then brings us closer to the client, and that also then helps us explore more opportunities to help the clients. So there are some of these drivers I've just called out. These
Yeah.
three drivers, if you like. But there are other drivers as well, which will be contributing towards the revenue growth and healthy revenue growth. And by healthy, I
Right.
mean they're profitable, high margin revenue growth.
Yeah. So I just have a follow up. This is a personal question. And I'm really curious to know, how does a microcap, for like, by all means, you're still a relatively small company, even though it's huge what you're doing already, get to partner with the likes of Google, Amazon, and all those big names. So yeah, probably there are some interesting stories in there, so you can expand a bit more on that.
Yeah. So with these technology partners, well, we enable all of our solutions and services with technology. That's the common denominator we have. Technology is there in every solution and service we bring to our clients. So these partnerships are fundamental for the growth of our business,
Hmm.
and they are fundamental for our clients to onboard and leverage for the growth of their business as well, right? So, this being the common denominator, we have been spending a lot of time and energy in fostering these relationships, right? Now, what we do is we go and, if you look at it from 50,000 feet at a very high level, all these hyperscalers may come across as doing exactly the same thing. But what we do is go much deeper into those technologies and assess where the real value is on one of these cloud platforms. So, for example, with Microsoft, if we are looking at, say, what are their AI capabilities, what are their data lake or data structuring and data warehousing capabilities, what are their BI and analytics capabilities, how do they really integrate with the rest of the ecosystem, because that's what is important for our clients. It's not just one particular platform. They want to see how a particular technology will fit in very harmonious ways in that ecosystem. We go and look for those aspects there. And what you find is there are certain capabilities and certain services within these cloud platforms that really stand out.
Mm.
And what we do is we go and create those specific solutions and niche solutions with these cloud platforms, so that our teams are also very clear that this is where we are building our strength and our capabilities in the practice. Our partners are very clear about what specialized solutions and service offerings Now Vertical is bringing to them, and our clients are also very clear that if they work with us along with this particular technology partner, then this is the outcome Now Vertical can deliver, and they can do a much better job than anybody else because we have got that very specific, narrowed down approach, and our capabilities and our strength is very deep. It's deep expertise in that part of the technology. So that's where we differentiate. Now Vertical can very nicely differentiate against the competition, even within the partner landscape or the ecosystem of, say, Google or Microsoft or Snowflake or Click or AWS. We can really be differentiated nicely because of our deep expertise on certain niche solutions.
Okay, perfect. So, if you had like a silver bullet and you could use it on one of your competitors, obviously not meaning anything bad to anyone, but who would you use it to?
What do you mean in terms of the
So,
competition?
Yeah, so if you could basically eliminate one of your competitors, who would it be?
If we could eliminate one of the competition, our competition landscape is really wide,
Mm-hmm.
David. And I think the way I look at it is, your competition is very healthy for you. This is where we learn from our competition as well a lot. So, I think we have coexisted with at many of our clients with our competition. The example of the big four that I was talking about, they are our competition as well. Um, when you talk about an enterprise level client, there are so many different partners they work with, right? And we have, over a period of time, learned this really nicely across the business, how to really coexist and still deliver your value and be differentiated for the client. Coexist in the ecosystem where you've got the competition as well. And sometimes you are winning, sometimes they are winning, but you coexist so that you are delivering the right value for the client.
Mm-hmm.
And we have worked with them. We have worked with them on the same program as well. We have worked with them across multiple, functions and whatnot. We have taken handover from them when we have displaced one of the competition, and we have always seen them as somebody who is a critical part of your own growth story as well. So yeah, I know I'm probably not answering it in a very specific ways, but I have seen and I've learned enough that having the competition landscape around you is really healthy for you as long as you manage it properly.
Mm-hmm. Okay, perfect. So we have some questions on Argentina. So what percentage of total revenues can be attributed to Argentina?
At the moment, we have got 30% of our revenue, overall revenue coming from Argentina.
Okay. And I'm curious to know, like, how much of that revenue is attributable to Argentinian clients? Because I do know you service some of the international clients through Argentina, so that might kind of mud the picture, right?
Yes, good question. About, I would say, 70 to 80% of our, it changes. It varies a little bit depending
Mm-hmm.
on, where the demand is coming from. But I would say about 70 to 80% of our revenue, from Argentina comes from the local clients in
Okay.
Argentina itself. Then there is, the other parts. We also serve the U.S. clients. We also serve, the Mexican clients, the clients in Chile. All of that is making up, say, another 20 to 30% of the revenue.
Mm-hmm. Okay, so the next question is, why did you decide to defer payments to Affinio sellers?
Ah, nice question. So Affinio sellers, they have been really supportive, stakeholders. They are shareholders as well, by the way, in now vertical,
Mm-hmm.
and they have been very supportive shareholders and stakeholders for us. And what we were doing when I was going through the whole financial re-engineering and the balance sheet re-engineering in the business, one of the objective there was to free up as much cash I can. I know we are already running very tight ship here because of where the balance sheet was a year ago, but we are in a much better place now. But I always was looking for any opportunities we could now create in 2025 to free up some cash and deploy that into the organic growth.
Okay.
And this is one of the opportunities I saw because there was majority of that payment was due in the first half of 2025 to the Affinio sellers. And like I said, they're very supportive. We had a very good conversation around what the situation is. I'm always transparent with my stakeholders, and this is where we agreed with them, and they kindly agreed to defer that payment towards the end of the year, which is a massive help for us to now free up that cash. from the operations that can be deployed into the organic growth. So that was a major reason why we just wanted to defer those payments till the end of the year. And it's not just the Affinio sellers. You would have seen, if you look at the core VI restructuring that we did over the holiday period in around Christmas, in December 24. That's where we deferred as much of that overdue payment, into the 12 months plus 3 months in 2025. Acrotrend did exactly the same thing. So this is all of these initiatives are happening, and I'm re-engineering all of this balance sheet and the cash flow so that we can free up some cash to put into the organic growth, because this business is now completely primed for acceleration in the organic growth, and I just want to make sure that it gets that feed.
Okay. So the next question goes to debt maturities. And could you elaborate on your strategy to manage debt maturities in 2025, including convertible bonds, bank debt, and deferred payments?
Yeah. So they're all three different things. Actually, one is the bank debt we have, and the acquisition-related liabilities, as I may call them. The acquisition-related liabilities have come down quite significantly in the last 8 to 9 months. I would say, this was one of my key objectives when I came in as the chief exec. I saw that as one big stress on the balance sheet and on the feasibility of the business. And I'm so glad that all of the stakeholders who were owed money have agreed to defer those payments quite nicely. And since then, everything is working as per the plan. We have not missed a single payment, which is quite healthy for now vertical, and generating that trust and confidence as well in the business. So one of the thing was the acquisition-related liabilities have come down quite significantly, and our operations are more than capable to manage and handle them. We don't need any external support for that. Mm-hmm. Then you've got the bank debt. We have now brought our operations, if you look at our profitability, where the revenue is, the EBITDA percentage that we have, and how we are generating free cash flow already in the business, we are very capable of servicing that bank debt as well. There's no problems within the cash flow to service that bank debt. And majority of them is that is anyways long-term debt. The acquisition-related liability is short-term, and majority of that is going to be paid out by end of 2025. Majority of it. Mm-hmm. So bank debt and the acquisition-related liabilities, we are very capable of handling ourselves through the operations, and the profitability in the business is managing it. The convert loan, which is due in October 2025, that's a big hump we have in the business. But we are working towards the strategies to manage the convertible loan as well. There are various strategies, various possibilities that you could have. One is, if I'm being very ambitious, as the chief exec, I must be, there's a possibility that it just converts at $5. That's the price it will convert at. So there's a possibility it just converts, because I truly believe that we are really an undervalued business on the stock market at this point in time. Although I'm not giving any kind of guidance on where the stock price is going to be, I'm just saying, that's as a chief exec, I have to dream of these possibilities, and it can happen. We are all working towards it. The other possibility is that the investors sitting behind the convert loan, they are quite friendly. They are very supportive of the business. They have been there. They have seen the business turn around for some time now, and where the business and the balance sheet is, that confidence is there. So there is a possibility that we may be able to renegotiate that convert loan, and we don't have to pay it by then. The third possibility is, the business is now in such a great position from the balance sheet perspective, from the cash flow perspective. You look at our leverage ratio, that has significantly improved. This business is really now in that sweet spot of, it's not heavily levered anymore. Mm-hmm. Right? So there is a possibility that we have got another 8 months, good 8 months before that money is due, it's possible that we may bring in another investor or a lender who can help us replace that convert loan with another financial institute or another convert loan possibly. So there are these different possibilities we are looking at. I'm not relaxed on that particular part yet, but we are absolutely working towards it.
Okay.
So these are the three different buckets that you mentioned, and I think it's just, we are very nicely servicing our bank debt and the acquisition related liabilities. And the nice story is, once we come out of 2025 as a business in 2026, we don't have the acquisition related liabilities at all. We don't
Yeah.
have the problem of the convert loan by then. So think about, when the business has really become a nice engine which is generating profitability, it's generating cash. How can you then leverage that for the future growth of the business? So that's the exciting part, coming off 2025.
Okay, so to the point of growth, what are your growth expectations for 2025? Do you anticipate double-digit organic growth? Obviously, I don't know how much detail you can give on this, but still, the viewers ask this.
No, that's always, I think business must always keep answering this question. This is the most fundamental question, in my opinion.
Mhm.
And just to give you some metrics, first of all, David, in 2024, we delivered 27% organic growth in just 3 quarters. So if you look at apples to apples comparison, if I was to compare where the revenue was at the end of Q4 2023, and I'm taking the Allegiant defense revenue out of it so that you're comparing apples to apples, we were down to a revenue run rate of 34 million US.
Mhm.
If you take Allegiant revenue out of 2023. At the end of Q3 24, we delivered 43 million US run rate revenue. That's a 27%, phenomenal 27% growth in the business. Now, keep in mind that we did not raise a single dollar. We did not have the funds for the organic growth. There was no capital available. We did not raise any other capital. And the business was going through massive transformation, right? We completely changed our strategy. We changed the business so much, and we delivered 27% growth. And I also told you about, how just the strategic accounts growth has been about 20% in just the top 30 accounts, just in the top 30 accounts. So organic growth, double-digit organic growth is already happening in the business, and we would love to continue on that. I'm not going to give any guidance as yet on where the growth is going to be, because we are just coming out of the massive transformation in the business. I just want to make sure that we are building that trust with the shareholders, delivering some consistent results in the coming quarters, and then we will get to that point of giving guidance to the market as well, when we are, and not just we, the shareholders are also more confident about our growth story.
Perfect. Yeah. So the second question is almost like it's almost the same as the first one, but I'll ask it anyways. Are you confident in achieving your near-term targets of 50 million in revenue and 20% EBITDA run rate by 2025?
100%.
Okay. Okay.
Just watch out our results that are coming up. Q4 results are not too far away. Q1 results will happen right after that. The business is in really good place. We, as management team, we have got our arms around the business. I have gone to all the parts of the business. I've traveled there. I've walked the floors. I've met with the management teams. I've met with all the other teams as well. We have sat down together, understood the business, delivered on the strategy as well together. So the management team has got their arms around the business very nicely, I would say, and achieving that 50 million run rate revenue and 10 million run rate EBITDA is absolutely achievable.
Okay. Okay, perfect. So, in a recent interview, you mentioned a potential capital raise to fund growth. What would this capital be used for? Examples: software development, hiring, debt repayment, and so on.
I haven't mentioned about the capital raise as such, but there are what I believe, David, is there are various dimensions to the capital availability, if you like, right? It can come from, of course, the most obvious one for a public company is the equity raise, right? You could have that equity raise. You could also have you could also raise debt. You could also restructure your capital, the existing debt completely, and bring the cost of capital down, or have more friendly terms, or change your amortization and whatnot. So there are these different dimensions to the availability of the capital, if you like, that we could have. And we are working. One of the things I've continuously said is we are very cautious about the equity raise at this point in time, right? We are treading that, or that particular concept or that possibility very carefully, just because I'm myself a big shareholder in the business, and I feel for every shareholder as well out there, and I really thank them for their support as well through all of the turmoil that we have gone through. We are in a beautiful place now, and I want to make sure that we are not diluting the cap table here for not a good reason,
Yeah,
right?
yeah, sure, sure.
Um, so that part is being handled very cautiously, if you like. But there are strategies that we could work on, which really, now the balance sheet is in a very different place. Our leverage ratio has improved dramatically. We are in a better position. The lenders are looking at us in a very different, through a very different lens now. When I joined as the chief exec, uh, there was not a single lender who would really have even a coffee with us,
Yeah.
right? Because the balance sheet was in such a negative place. But now we are having those inbounds. We are getting those calls from the banks as well. We are getting the calls from the credit houses, and there is absolutely a possibility that we restructure it in a way, the overall debt in a way that it also puts some money on the table on the balance sheet for organic growth.
Hmm.
So there are different ways in which we can manage that. And like I said, one of the areas that I focused deeply on when I took over as the chief exec was the financial situation, all the liabilities that we had, where the balance sheet was, where the cash flow was, and I understand that really, really well for now vertical now. And this really gives me all these ideas and possibilities to deal with and work with. And I've got the management team that's very supportive of any of these initiatives. So yeah, in the future, there are definitely those possibilities I'm going to be leveraging to make more of that capital available for us. Now,
Hmm.
the second part of your question was, what would you use that capital for?
Yeah.
And primarily, it's for growth. And even when I say, for the organic growth, we are not looking at inorganic growth, by the way, as I've been saying all along. We are not into the M&A. We are not thinking about any acquisitions as yet. It will definitely come back on the table. The has improved quite significantly, so we would want to bring in that inorganic growth as well. We have M&A in our DNA already. We have done many acquisitions. We now have the template for integration of the businesses as well. Many businesses struggle to integrate one business. We have integrated 12
Yeah.
here. And now we've got the template for the organic growth too. That's what we are delivering at this point in time. So where we will put in all of this is into the organic growth, first of all, right? And even within organic growth, the most of the investment will be required for the commercialization of the solutions and services, which includes the go-to-market, which includes the marketing investment, which includes the sales engine, the pre-sales engine, if you like, very senior consulting style technology background, senior management team. That's where the investment is going to go to really bring that acceleration in the organic growth.
Perfect. So I know there's a lot of geopolitical kind of related questions. So we have one here, which is given the uncertainty around tariffs and potential increases in hardware costs, how do you see this affecting discretionary IT spending in North America and Latin?
That's an interesting development that's going on in the world right now,
Mm-hmm.
isn't it? And certain level of uncertainty as well. But thankfully, we work in the technology sector. We have got some significant clients in the technology sector. But fortunately or thankfully, as of now, we do not have any of the clients who are reliant on importing the hardware from the other countries, and it does not impact their business model as such.
Right.
So we do not have, and we did that very quick, scanning and the research, as soon as these news were developing. None of our clients are impacted by that in ways that it impacts us as
Mm-hmm.
of now. So we do work in the technology sector, but that's just one of the industries we work in. The nice thing about Now Vertical is that we are not concentrated in just one industry. We work in financial services, we work in technology, we work in pharmaceuticals, healthcare, retail, e-commerce. There are different types of industries. We've got some revenue from the government, public sector as well. So there's nice diversity, and as of now, there's not a single client that is impacted negatively, heavily by these tariffs.
Okay, perfect. So, how much does the company expect to pay in bonus earnout payments to Acrotrend and other recently acquired businesses in the coming years?
So, like I was mentioning about the acquisition-related liabilities, these are the acquisition-related liabilities and the earnouts. The good news, and I'm proud to say that all the earnouts have been paid out.
Mm-hmm.
First of all, we brought in certainty around the earnouts and made them fixed earnouts rather than keeping some variability around it. So
Yeah.
we just fixed those earnouts, and all of the earnouts have now been paid out. So there is nothing that's left from that pot, if you like. The other part is the acquisition related liabilities, which I mentioned. Our operations and the cash flow from the operations is more than capable to manage those acquisition related liabilities in 2025, and we'll get over those acquisition related liabilities by the end of majority of them by the end of 2025. So yeah, those are the timelines and the confidence around managing them as well.
Okay, perfect. So, the next few questions are similar. So, why did now Vertical fire its IR team, IR firm? Sorry, and there seems to be a focus on communicating bullish sentiment about the stock price. Is this intentional, and could it become a liability rather than an asset?
Okay, I'll answer the second question first, which is about the bullishness about the stock price. I think what I'm bullish about, David, is the fundamentals of the business.
Mm-hmm.
I'm bullish about the assets in the business and how we have turned it around and positioned the business now for future growth. I'm bullish about the management team and the capabilities that the management team now brings to the table to accelerate the organic growth and the future growth strategies in the coming years. That's what I'm bullish about, really, in the business. I'm so bullish about the technology that we are working on and how we are helping our clients and how we are generating those success stories that we are contributing towards the success of our, clients' business model as well.
Mm-hmm.
That may be translating into the bullishness on the stock price.
Okay.
But I don't comment on the stock price. I focus, all our heads are down on improving the operations of the business, delivering the organic growth. And we know if we do that, it will have the positive impact on the stock price as well. And I'm sure more and more investors will see this stock as a phenomenal growth story. They will put in their confidence and support into the stock as well. So that to me is the consequence of just building a good business, a healthy business, the right kind of growth story in the business, having the right management team in the business. The management team now owns 27% of the equity in the business, which
Hmm.
is up from, say, about 7% that we used to have in January 2023, 2024 as well. So that just demonstrates the confidence that we all have in the potential of the growth. And that's what we are working towards unlocking for Now Vertical. So, yeah, I would not comment on the stock price itself, but I know, and anybody can do this calculation, there are many savvy investors who can just look at the numbers and would know that we are highly undervalued stock.
Hmm.
Yeah, that's my comment on the stock price and the bullishness around it. About our IR firm, let me just say, we had good experience with our IR firm. We didn't fall out with our IR firm at all. In
Hmm.
fact, we were quite pleased with how we were working together.
Okay.
What I think what we need to what we have acknowledged and realized here is that we are a global business, right? We have got global client base. Our investors are becoming more and more global. I'm just having this, you are in Portugal, David. I'm having this interview with you, and you have got a lot of the audience in, outside of Canada as well. So what is that telling us is that we need to be carrying the global mindset as well.
Hmm.
For many of our advisors that we bring on board, they could be different types of advisors, that we need. And IR firms is just one of those advisors. And what we are looking at is because our point of view or our horizons are expanding way beyond Canada. We are looking for those advisors who are also global in nature and have got that outreach, proper global outreach. So that's one of the key reasons why we are now out there in the market looking for those kind of advisors who can really overlap with us
Okay.
nicely globally.
Okay, so let me see if I get it right. So you basically decided to finish the relationship with your previous IR firm because you're looking for another one that might cater your needs better, right?
Correct, correct,
Okay.
absolutely.
Perfect. So yeah, I think we got through all the questions from the audience. They were really hard questions, so congratulations for going through them. Now I'll go to my personal questions, and the first one is actually, how was your childhood like? Probably could just briefly comment on your studies and all of that good stuff. So I'm just curious to know what made you who you are today.
Wonderful. Not many people ask me these questions these days. David, everybody is interested in what are you doing for the business.
Yeah.
But thanks for
Yeah.
asking that. Um, I was born and raised in India,
Hmm.
and I grew up 4 kilometers away from the 0 mile of India. And the 0 mile of India is basically just the center, very center of India. So that's where I grew up. And I was born to some phenomenal, parents. I would say, they're absolutely brilliant human beings. They raised me really well. I mean, we were not rich with money while I was growing up, but they gave me the richness of, the values, very rich culture, baked in that ambition in me in the right ways, put in that inspiration, if you like, to do something and so yeah, very very glad to be have my family and my parents around me. They've always supported me in various ways, and If you like, if I consider I was the elder child, so our family grew from 3 members to 10 members now. So I've got a younger brother, and he's 6 years younger to me. I got married to my schoolmate. I met
Wow.
her when when I was we both were 15 years old. That's when we met and fell in love with each other. We are still married, and we are still madly in love with each other. We've got 2 wonderful daughters, and they are so loving and caring. And I've got my brother, his family, he's married as well, and he's got 2 boys, and they are adorable, they are lovely, and the whole family, these are the 10 people that I was talking about in my family now. And then there's the extended family as well, from my wife's side, and everybody has been extremely supportive and loving. And that really, this whole family, my brother, my parents, my wife, the children, and all, what that does to you is gives you that emotional stability and strength,
Yeah.
which I believe is so critical when you are running a business, when you are going through the ups and downs, when you are going through turmoil times, when you're really in difficult states, and even when you are really riding a high wave, there are people around you who are very supportive on both sides, right? Whether you're feeling a bit low, or you need that energy, you get it from there. You're feeling very happy, there are these people who are happier than you, and they're always supportive. So yeah, that way I think my childhood has been absolutely phenomenal, I must say, and really um, grateful to the universe and God for that. I did chemical engineering by academics, so
Hmm.
did that again in India, but somehow felt that was not the thing for me. But I met really good teachers. People play a critical role in what you are and who you are. I think in my case, it has played phenomenal role in massive ways, I would say. So yeah, did my chemical engineering. Have some really really good friends as well. One of the friend actually talked me into going into IT,
Hmm.
and so I did. Worked with the likes of some of the system integrators. I work with Deloitte as well, both in India and then in the US. Also, I work with some boutique firms as well. So yeah, the career was shaped on a very strong foundation of what I had in my childhood. But also one of the, like I was saying, people have played critical part in my, very important part in my overall journey. And one of that individual is David Inns, who has been my business coach and a friend and a mentor for many years now, for almost 13, 14 years. And he's the one who really helped me build the mindset of a businessman.
Hmm.
It's like how to think about the business, how to look at certain blind spots in the business, get your arms around your financial KPIs and cash flows and balance sheet and whatnot. How to think about the growth within the clients, how to think about the teams and how to build those teams and how to really build your all of these things. How do you build that growth mindset, and how do you really go through different situations in the business? David Ince is one of those people who has had such a positive role in my life, and I'm still in touch with him. Still work with him as a business coach, and I think everybody, the earlier the better, I would say. Everybody, in my opinion, must have mentors and coaches. It just makes your life more fulfilling and better.
Mm.
Sorry,
Perfect.
you just had the question about the childhood. I just went a little overboard there.
No worries, no worries. Actually, I was happy that you did that. So I'm also curious. How do you manage like a Canadian listed company that has a global operation and you're based in London? So how does that work for you? Do you sleep 1 hour a day? Like how do you?
No, I've always been in whatever I was doing for the last 25 years. I was always in the global teams.
Hmm.
One way or the other. So the global nature of the business, it comes to me quite naturally now. It's second nature to me.
Hmm.
So that's not a problem about different time zone and how to manage those time zone and whatnot. I do travel to Canada quite often. I was there in January and I spent a few days. I'll again be there in a few weeks' time. So I do travel to Canada. Love it there. Other than when it's too cold, like minus 20 degrees. No, 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 that's not me. And I think managing the global operation, there's so much of excitement around it. You get to work with people with different cultures, different background, and they bring different capabilities and thought process to you as well. So I really enjoy that, and I'm so nicely supported by the management team, where I don't really need to sleep only for an hour.
Okay,
The
okay.
management team really works really really well, and we support one another quite nicely as well. So yeah, again, very lucky, very fortunate to be in this place with the management team, and yeah, it's really fun and exciting to be running now vertical.
Nice. So Sandeep, you're not just a CEO, you're also the founder of one of the businesses that now Vertical acquired. So I'm curious to know what kind of mistakes have you done in the past as a CEO or an executive, and what lessons have you learned from those mistakes and that you might apply today?
Oh, I mean, I can probably talk for the whole day, David, about the mistakes,
Yeah.
and I don't shy away from talking about those mistakes either. Many different types of mistakes. They could be ranging from how do you really think about the strategy of the business, before you could crawl, walk. I was thinking about flying.
Hmm.
How do you really think about? I was talking about those financial KPIs. There was a point in time. I'm from my family. I'm the first generation business person, if you like. So I didn't have that mentoring in the family or any kind of background of running the
Hmm.
business. So even the financial KPIs, and I'm not from the finance background, just understanding the financial KPIs and managing them properly was also a challenge. And I made some mistakes. There, like I said to you, David Ince was one of the business coach that I worked with. My primary business coach, I would say, who has really helped me understand the business with different in different situations under different lights. Um, how to think about uh, growing the value with the clients, and building that trusted relationships over a period of time, and how not to think about the short-term gains and letting go of those short-term gains, and really working on the long-term relationship and those long-term partnerships. I've made mistakes over there as well. I've made mistakes of really falling into that trap of, we are really good at delivering solutions and services to our
Hmm.
client. And it's a different mindset to a mindset of running and building a product business or a software business, if you like. And I've made some mistakes of thinking that, we can just switch over and become a product company overnight.
Hmm.
uh, and learned many different things from there. How do you really create the deeper focus and the expertise on certain things rather than actually trying to be everything to everyone, right? So how do you really create your niche? How do you create your USP and differentiation, if you like? And I've made those mistakes of, whatever was thrown at me, I'll go and very happily catch that and wanted to do everything under the sun.
Hmm.
Um, so many different types of mistakes, if you like. Some are expensive, some are not so expensive. Some made me even cry. you know,
Hmm.
some made me lose money. as well. Some made me, even in terms of building the right relationships while I'm building the teams. I've made mistakes over there as well, but I've learned a lot around how to manage those relationships, how to think about the teams, how to hire properly, how to restructure the business properly as well, and thinking about the teams and the individuals and the people there. So yeah, like I said, David, I can go on and on. There have been many different mistakes, but I've learned so much over a period of time, and there were many different individuals, many different people who helped me through those phases and to learn these things properly.
Okay, so I know you have to go in a few minutes, so I'll just ask a few more questions and then we can kind of wrap up. And the first of those questions is actually going back to the emotional side of things. You mentioned emotional stability and all that, and I would like to know how does it feel to be a CEO of a listed company that is undergoing a turnaround, and yeah, maybe you could share some anecdotes on that.
That's very exciting, actually, David. I must say, I feel so fortunate. I love challenges, and when
Mhm.
I saw this, I've been in the data analytics space, the solutions and services space for the last 25 years now.
Yeah.
When I looked at this challenge within Now Vertical, I was just, like, this is for me.
Hmm.
I know when you go back, if you go back a year, it sounded like almost impossible thing to solve. But you just bring in the right experience and the right mindset and the right management team, and things are absolutely solvable. And that's what I believed in, and that's why I put in a lot of my money into the business as well. So I think that this is very exciting. We have had, Now Vertical had its phase of the acquisitions and growth by acquisitions. We had our phase two of, doing the integration, which was again a very difficult challenge with no capital available. In fact, very poor balance sheet on
Mm.
ad, and we have gone through that phase, and now we are looking to this phase of the organic growth as well. So it's very exciting. I would say this is what I love. This is what my sweet spot is. This is where I've gathered so much of experience over so many years, and I'm so glad that I'm able to put all of that to work,
Hmm.
being the chief exec of Now Vertical.
Cool, cool. So, yeah, I hope you answered this really honestly. But how many times a day do you check the the stock price?
I must say, I'll be again very transparent, David. I never used to check. I would check the stock price once in a while in the week, maybe two or three times in a week before our Q3 results, right? Because it
Hmm.
wasn't doing much anyways, and it was just going in one direction, right? And we knew the reason why it was the case. But I had to detach myself from the stock price and focus on improving the business,
Hmm.
really, and changing the fundamentals of the business and running the strategy. So before Q3 results, I would say I wasn't looking at the stock price. After Q3 results, of course, the stock, you have seen what the stock has done,
Yeah.
very positive for everyone. And I must say now I look at the stock price twice a day.
Wow.
One, during the close, during the open, and during the close as well. I mean, of course, I'm not sat there just looking at the stock price because, again, like I said, our job is to really make sure the fundamentals of the business are right, the operations are robust, and we are working towards the strategy, which will obviously impact the stock price. And all of our management team is really focused on that. But yeah, that was a transparent, honest answer.
Nice, perfect. Yeah, actually, I have a couple of friends that have a major portion of their net worth in our vertical. So I have like a percentage, So I guess it was quite a bit of a roller coaster, like up and then okay, back down a bit again. But yeah, what matters is the long term. And speaking about the long term, I'm really curious to know what is your 10-year vision, say, for where you'll be, either now vertical or outside of it. Like, where do you see yourself in 10 years?
Okay. 10 years is a long period, I must say, David.
Hmm.
I don't think about 10 years as such. I don't think that far out.
Hmm.
Of course, you have your bigger vision, that's set out there. Um, but if you were to ask me, if I'm assuming that I'm still, the chief exec of Now Vertical or in a role, could be just on the board of the
Hmm.
Now Vertical. But if I'm running Now Vertical as the chief exec in 10 years' time, I know that this is a massive business by then in 10 years' time. So it's going to be phenomenal, very fulfilling experience and achievement in 10 years' time, I must say,
Hmm.
if that's happening. Other than that, I would also definitely want to see myself giving back to the community. And by the community, I mean, people where I was, 25 years earlier, I know how much I have gained from the help that I got. And I was so lucky to get that help. I got that help from many different individuals who had done this. I mentioned David Inns as well, and there are other people also, in the industry. My co-founder Shailesh Malya has been there, which we have worked together for almost 20 years now. These are the kind of things where I believe giving back to the community. There are two different types of communities. One is the people that I said, who are in the business or looking to do something in the technology world. How can I offer any kind of help? How can I offer help to the management teams, if you like, who are going through the restructuring of the business or they have got very ambitious growth plans? How can I offer my experience to them as well? So I would want to see myself doing that. The other part of the community, I believe, is just, the universe has been very generous to me, even in terms of my resources and the wealth that I've got. I would absolutely want to see myself helping that part of the community and do some good for the world as well. Of course, I think I'm going to be a granddad by then. Would definitely want to see myself being a granddad and spending more time with my family and the grandchildren as well, and spending some time with my wife, my brother and his family, my daughters, hopefully my parents as well by
Hmm.
then, and spending some time in Spain. I
Okay.
love being there. I've got a place in Malaga. I go there quite often, and whenever I'm there, no matter how how short the trip may be, it may be just a weekend, but the energy that I get from that place, just the people, just the weather, the sun that you get, the environment that you have, the food that you get, the culture that you see there is just phenomenal. So yeah, should be spending more time there
Yeah.
as well.
You should also visit Porto at some point, or Lisbon for that matter. It's really similar to Spain and all that, and the flights are cheap, so I guess it's a good
That's one
combination.
place on my list for sure, and it's not far away from Malaga either. So yeah,
Yeah, yeah. So yeah, Sandeep, I think it was a really wonderful conversation. I just want to thank you so much for agreeing to chat with me, and I hope we'll chat soon. So yeah, thank you so much, and
thanks
see
for
you.
having me with you, David. And you touched some of the nodes which I have not ventured into for some time, and not many people have asked me in the interviews. So yeah, thanks for taking me there.